Hey, Crypto Hotep here with another investing video. Week 10. We've made it to week 10 uh, of this tracking of the family portfolio with M1 Finance. If you're not familiar with the family portfolio or even what I'm talking about right now, do a favor, do yourself a favor, go to week number 1 in the channel and just watch that video. It'll explain the whole step process, method to the madness here, and what I was thinking when doing these videos. And in a nutshell, these videos are specifically for my edification and also for my family as we journey down stock investing as well as dividend investing, more importantly. I had my family pick out stocks of their choosing. I did make a short list for them, and they picked them up. And then we actually used M1 Finance. M1 Finance is the broker we use. It's a great piece of technology that they have, and they have what they call pies within their portfolio. So you can have a family portfolio, and within that family portfolio, you can have a pie, which is a sub portfolio, and I have that designated to each member of my family and their respected stocks. So, with that being said, before I begin, I should say, is PSA, nothing that we say here is financial advice at all. Please consult a professional before you choose to invest in stocks, crypto, metals, anything volatile. Make sure you speak with a professional. Now, jumping right in to week number 10. But before we go to week number 10, we got to look at the last week. So last week we were up over 6%. Looks like here. And then our balance last week was 625.85. Very good. Well, this week we are up again, and we are up over 9%, almost 10% at 9.93%. Our balance currently, year to date, 657.02. Very good, very good. We are on the upside here. And as always, we look at the activity. The activity between last week, we've had a lot of dividend activity here. So John Deere and Company, we've had dividends from Lowe's, Clorox, Amex, Costco, Colgate, Procter & Gamble, and Apple. These dividends are specifically for holding these stocks, and this is why I've put a distinct value into dividend investing, is because I had to do nothing to acquire this money here. Now, a regular person would look at it and say, "Oh, that's only 3 pennies. Oh, that's 9 cents." Yeah, true. It's 9 cents, but I literally had to do nothing to get that. The company's paying me to hold these stocks, and if you have a long-term mindset, you can think, well, if I have this amount of money and it generates this amount of dividends, then it can only increase the more of the shares that I hold. So that's the premise of that. And we did have some buys this week. So we wound up paying ourselves. We did have some buys with Nintendo, Amazon, McDonald's, Tesla, Pepsi, Clorox, Apple, and Google. When we jump into that portfolio, here we will check out our slices of our pie here. So we'll start from bottom up, and as you can see, we're all in the green. So the whole fam is in the green this week here. So we'll go to our middle. Our middle has a weighted rate of return of 6.82% for their stocks, and they've selected Amazon, as we all know, Nintendo, and Costco. Costco up over 10% for our middles portfolio. People were counting out Costco tremendously when it hit 700 and when it hit 750, and they thought the ride was over. Not so. The ride has just begun with Costco. And, we can, I think that's where the power of compounding as well as also dollar cost averaging comes into play here. Nintendo finally turning the tide here with Nintendo up over 2.96%, and then Amazon still on a tear, up over 5%. Now let's see what we have here for our oldest. Our oldest, as you guys know, if you've been following, two stocks, keeping it simple: Apple, McDonald's. Apple over 13%, right? People wrote off Apple. One thing that I've found in the stock market and with companies, investing in companies, I should say, is you never want to bet against Apple. You never ever want to bet against Apple at all. And they always weather the storm. Something always happens with their business model, and it's a company that will never go anywhere. So our oldest up over almost 4% for their portfolio. Youngest is climbing up. Youngest has weighted rate of return of 6.35%. What's nice is our youngest has come back strong. Now, if you've been following, you'll notice our youngest stocks were primarily in the red. Why? Because of Tesla. Tesla was pulling it down tremendously. But again, my thought process: our youngest can handle that volatility. We're just gonna continue buying Tesla. We're gonna continue buying the stocks we believe in, and we're gonna weather this storm. And this is what happened. Price eventually will turn, and it has turned. We have Nintendo up. We have Tesla up over 5%. Fantastic. And then Apple again up over 9.65%. Okay. And even so, we have some dividends here that they earned. They earned Apple 2 cents on that dividend there, which is nice. Love to see that. And then, drum roll, please, we will go to the member of the family who is holding the family portfolio stock up on her shoulders, and that's my wife, at a weighted rate of return year to date of 26.3%. Crazy. Just tremendous. As if you have been following the channel, you'll know my wife's stocks, very simple: Celsius, Google, and Pepsi. Celsius was the main driver of her portfolio early on, with its distinct run up in price. And then it pulled back, price pulled back, and yet we are still up year to date over 36% on Celsius. Google over 25%, and then Pepsi over 11%. Just tremendous collection of stocks here. And it's simple: three stocks. You love to see it. And then my stock's up over 3.8%, so not as tremendous as my wife's, but we are still in the green here. Okay. We'll just go through a couple sectors here. Industrials, again, industrials are carrying the load. This sector is up over 7.3%, and Duke is leading the way, up over 2%. Duke Energy, Cintas, Caterpillar, Chevron, Waste Management, all trending upwards. Okay. And we'll go into restaurants and food. I think we did that last week as well. But restaurants and food up over 4%. The GOAT, which is Coca-Cola, for me, I will always invest in Coca-Cola, up over 7.35%. Domino's Pizza. Domino's Pizza and Texas Roadhouse, just tremendous gainers here. Double-digit growth here in the rate of return. Hershey coming in fourth here, up over 8%. And then obviously Starbucks bleeding out here, down double digits, over 13% down. But we are still buying Starbucks. Okay. And guys, with that being said, the family portfolio up tremendously. Fantastic week for us. Up over 9%, 9.93%, with a balance of 657.02. The stock today that we are going to be looking at and analyzing is Walmart. So Walmart, as you all know, they delve into retail and e-commerce as well. And basically, they're part of that consumer staples sector, if you will. The analysts have forecasted a strong buy for Walmart at $68.75. Currently, it's at $64.65. So a little bit of room to grow here. Hopping over into the financials. Financials for Walmart are good. They're consistently up in revenue. Nothing dramatic, not a huge spike, but a consistent upward trend that you like to see. Okay. On that balance sheet, one thing that stood out to me, cash growth is now positive, where in 2021 and 2022, both was double-digit negative. Okay. Current debt is slightly decreasing. It did increase last year, but nothing too dramatic as of right now. Total debt has grown. It's no longer at the negative, so it has grown. Again, not a huge worry on my end. It looks like something that's manageable. Retained earnings. I do like retained earnings. Again, retained earnings is the money that's left over, not paid in a dividend, but that the company has to potentially invest in its processes, in its business itself. And we have steadily stayed between that it looks like mid 80s mark here for retained earnings, and it is positive. Okay. On the cash flow side, net income has increased year over year, and that's what you like to see. Operating cash flow and operating cash flow growth. Both years, tremendous growth in both of those. Love seeing that. And on the dividend side for Walmart, this is something that I like to point out. So their dividend yield is 1.28%. So not very enticing, right? I don't really look at that. I look at the dividend growth. Dividend growth is almost double digits. It's 9.21%. And their payout ratio is 43%, which is below my threshold of about 65 to 70%. And then here's a big kicker. Over 5 decades of growth for dividends. You can't beat that. You can't beat that consistency. And you can see here, consistent Walmart dividend growth and their year-over-year growth. And then lastly, we'll jump into a chart of Walmart here. We'll get off this crypto chart. And we will go to Walmart right here. So I did mark out some levels for Walmart, and they were based off of the weekly chart. Their weekly chart looks very similar to Costco, which is it makes sense, right? Both retail players in the market, and really no dramatic events have changed their price per share. So I did mark out some key levels here, as you can see here, and mostly these are levels that have tested both as support and resistance. Okay. We have this most recent level here that has spiked price because of earnings right here. So if we go into the daily and we kind of zoom in just a little bit here, we can see we have this big quote unquote green candle, even though it's blue, on earnings because Walmart did have a double beat on their earnings per share and then also revenue. They beat both of those estimates. So we can see this price spike up here. What I would suspect is if we do get a chance with a pullback, I would expect that pullback to be somewhere around $60 for a move back up if we get that. So what I'm suspecting is something along potentially these lines where we have two key levels. Price comes up, comes back down, retest that key level just as a springboard to go back up. That's what I'm thinking, but who knows? You may not even get that chance with Walmart, and we may consistently go up, but we'll see. Okay. And with that being said, guys, we will wrap this video up. As always, if you found this video helpful, feel free to like, subscribe, comment. Let me know what you think of the video. Let me know what you want to see. And as always, thank you and happy investing.